Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, October 18th, 2018. I am Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES. We've had quite the reversal from the recent lows. Again, we mentioned before that while this wasn't the strongest low, it looked like a serviceably strong low that could get us back toward our target. And remember, we're looking at 28.5. That's the target. On this day here, when we found a strong low, we were looking at 28.5 as being reached over the next 1 to 5 days. 1, 2, 3, 4, 5 days later, here we are, getting very, very close. The high of 24 quarters. The previous session, we could still push through that level and perhaps get as high as a 28.75 to 28.80 zone. That zone could still be hit, and then we could see another round of weakness. For example, all of these late bulls here that got stuck in their position, to come back to that point there would be a great way to get out. And again, that could lead to a bit of weakness here, and then all of a sudden we have ourselves a key range. So for the most part, again, the flow is still to the upside. We had a stop run day here, a retest after stop run. Right now, a little bit of an absorption day. And overall, as long as this point right there continues to hold, and that's the prior mid, yesterday's low, if that area continues to hold around the 80, 83 area, then we have more upside ahead. Failure to hold that level, even on a closing basis, would open up much more weakness. We could theoretically get below today's low, find a trap, and then squeeze. But again, that wouldn't be the strongest at the moment if prices can hold this mid. So again, right now, kind of an absorption day, digestive day, but the flow is still to the upside, at least in the near term, until proven otherwise. A failure to hold 27.75 would prove otherwise. All right, let's take a look at the NQ. The NQ here, very similar price action, only this one had more elongation to the upside, a stronger low, higher market structure. Support, and you see right here a major stop run day, a great retest after stop run. Right now we are pushing below the previous session's midpoint. That is very important right there. Again, that could open up a retest back toward these lows. In the trading room yesterday and in our Swing Trade Pro 2.0 live trading sessions, we were looking at 7,200 here. If price were to push into that 7,200 LVN below yesterday's low, that could offer a bear trap for a shot at slingshotting this thing one more leg higher into, say, 74.40. So we may still have more upside in the near term. Again, any failure to hold 7,200 on a closing basis would suggest a return back toward recent support. So right now, a great key range already in effect. We hit our target already, which was the 73.18 quarters. Again, we offered that target on this day when we had that strong low. We mentioned that this would be the target here sometime over the next 1 to 5 days. We got it, and now we could be in this range for a little while before something significant happens on the longer term. But again, we got ourselves a great key range to work off of heading into the end of the year. Here's a look at crude oil. We've been very bearish crude oil ever since price popped above 76s right here on this day, right there. That pre-market report, basically on the 4th of October, that one is when I mentioned that if there's a failure to hold 76s, because during that report we were sitting up here in a narrow range, I said that could open up weakness back down, and it could open up a return back as low as 69.34. We got that today, almost got it yesterday. After that, when price swung lower, we were looking at 75 to 75.27 as an opportunity to sell it down, and we got it. And then recently, on a failed new high here, we were talking 72, 72.50s as an opportunity to sell it for a push into 69.34. So those moves have played out 1, 2, 3 times this month, and we're not done going down just yet. So if you look at crude here from this perspective, you have kind of this uptrending channel. We may see crude come down to the bottom of the channel, say 66, 67s, right? And then we could see this thing kind of hold, and then we might make the return trip back up and take those highs out yet again. Just like we did here and rallied, just like we did here and rallied, just like we did back here and rallied. Perhaps we see a little bit more downside toward the lower end of this range. Boom, that could take you into about 66, 68 zone, and then from there, how does it build out, and then what does the return trip look like if one does occur. So that's going to be my primary approach. More downside in the near term, watch the previous month's low, and then below that low or into that low could be a trap to return back up toward 676 and maybe even 77s. So we have more potential upside here after this thing is done going down, but right now the flow is to the downside. Let's take a look at gold. We talk about gold here holding for the first time after a rally in many, many months. If you look at this thing here, ever since we hit the top here, and that was in April, and that was right when we were getting into the major long-term resistance level. I mentioned price just does not get above 1375 over the last X amount of years. It just does not. And once we saw that major rejection, we knew we had a shot to go back to the bottom of this range. That was 1300. And then once price failed to see that absorption pop here, it was all downside since then. We have not been able to find any bullish footing since April. It has been nothing but weakness. And so for the first time on this rally right here, we are actually holding after a push higher. That, again, doesn't guarantee that we go up, but this is the first time we are seeing actual signs of strength in gold and an actual ability to hold a breakout point of 1220. You see this gold moving average right there. It's coming up to provide support. It's popping back above the slower moving averages. That appears like a change of bias. Again, here with the lower value relationships, and now popping back above with a higher value relationship forecasted for the next month. That appears to be a change of bias. And in that scenario, we could see a return back toward value, and that's 1287s. It wouldn't be terribly fast. Again, this market hasn't demonstrated an ability to go up. But if price can stay above 1220, or better yet, start to push through 1240, it opens up a pathway to 1287 down the road. So those are the key levels to watch in gold. Lastly, we will take a look at RTY. We haven't looked at RTY here in a while. Again, this one sold off significantly. We talked about this one a while back and mentioned 1620s would be a big area that a bounce would likely occur, but if not, it could be a huge sell-off back to the next support level, and that would be 1530, and we got it. A great move right back down. You can see we're back into this market structure a bit. That suggests a bounce back to 1620. So like a lot of these markets, we've found some near-term lows. We saw a stop run day, retest after stop run, holding the mid right now. Again, unless price breaks back below 1568 in the near term, we could be flowing to the upside at least into 1620 in the near term. That's still some good distance from here. And if above 1620, if price get back above that zone, that's when it gets very interesting. So right now, watching for a return back to 1620 as long as price can hold 1570s. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck and trade well.